Okay, my name is Eleni Gabre-Madhin. I have recently joined UNDP Regional Bureau for Africa in New York, but previous to that, in the private sector, I had an incubator and venture angel seed investor in Ethiopia, and prior to that, launched the commodity exchange. Thank you.
Hi, everybody. My name is Saad Sheikh. I'm one of the partners at TLG Capital, a private equity, private debt fund in London, focusing on Africa. We invest anywhere from early stage to late stage businesses. We've invested in over 30 companies so far, and very keen to learn more about all the businesses here. So far, our investments have been in sub-Saharan Africa, but very keen to expand to North Africa, which is why I'm here today. So very keen to talk to most of you guys here.
My name is Ashraf Khatib. I'm working for Ekuity Holding, the Egypt arm of KIA. KIA stands for Kuwait Investment Authority, or the Kuwait Sovereign Fund. We have existence in Egypt since the 60s, and one of our relevant investments is 50% shareholding in the Arab African Investment Bank. And recently we invested in a North African venture capital fund, Sawari Ventures. Before that, in my previous job, I had the honor to build a modern microfinance institution and a venture capital fund.
Hi, Emad Fouad. I'm CVentures Managing Director. CVentures is a corporate venture capital firm. It's totally owned by CIB. We've been operating in the venture capital space for the past 4 years, whether globally, regionally, and locally. Currently, our primary focus is to invest in Egyptian startups. And most recently, we have become a bit of vertical agnostic. So we were originally focused on investing in only financial technology. Now we've broadened our scope. We typically cover seed and A funding rounds. My experience for the past 25 years, I've been in banking operations, corporate credit, private equity, and recently venture capital. And we have Aubrey here.
Yes, well, nothing's better as a moderator than to have your panel so competent they can start by themselves. So it's a pleasure. Sorry, I was upstairs and apparently we're running on 2 different schedules. Listen, this panel is a very exciting one because I think for the entrepreneurs in the space, the question about how to raise money outside of traditional ventures is a very important one. And I wanted to start this conversation by diving into one of the most important things that I see in the startups that I've invested in and engaged with, which is that they struggle to find ways to fund working capital. And often working capital, venture investors don't want their equity to go direct to working capital. So I'll start first with Saad and how you're thinking about this working capital problem that a lot of startups face and how you're innovating in the space.
Thanks a lot, Aubrey, and a very kind of apt question for what we do. Our intent is to provide debt financing to businesses to help them grow. For primary reasons, as you've mentioned, working capital plays a significant role in that. In addition to that, there is a CapEx angle that VCs or even late-stage businesses can use, but I think let's focus on working capital. There are 2 angles of working capital, as we've discussed in the past as well. There is dollar-denominated investments that are coming onto the continent, at least sub-Saharan Africa primarily, but then there's a lack of local currency play in the market. As a consequence, what we decided, and we've been operating in this space for over 10 years, what we understood from our investing experience is that local currency angle can only happen with local players. So we've had we've joint partnered with a bank in Nigeria to develop a local currency credit fund. The idea of that credit fund is to invest in infrastructure as per the definitions of the pension operators in Nigeria. That definition is very broad, which is amazing to see. So through that initiative, I can invest in anything from digital rails of payment platforms, lending platforms, anything on the digital side, but also conventional infrastructure like rural telephony. That again is an area that hasn't been stressed enough. So I think our perspective is there is need for that dollar tranche, but there is a definite lack of local currency aspects.
And so why can't most entrepreneurs, again, outside of maybe a few countries in Africa, just go to their local bank to get working capital? Why do you guys think that that's such a challenge for some of the entrepreneurs? Maybe Emad?
Well, I can jump in here.
Yeah.
I think there needs to be a bit of a paradigm shift in how banks, and not only in the continent, across the globe, how they define risk and how they deal with it. Because in startups are all about growth and the future and the potential. And being a banker, I know for a fact that all lenders are looking into it by seeing and assessing history
The past versus
and the present. So there is a gap here. So we need to fill this gap with proper expertise and paving the way for these players to go and step in and start actually taking more risk on the startups.
Yeah, Ashraf.
Yeah. I think Aubrey, to add to what Saad and Emad said, it's not just to make the paradigm shift. Maybe the banks try to solve it by themselves and then maybe realize that to partner with someone like venture debt fund or with microfinance or consumer finance company or a fintech company who has the agility, the network, the channel, maybe better. And that's why we see, yes, there's a venture capital in Nigeria, but I think soon you will see 2 or 3 venture capital debts. Venture debts are launched in Egypt, and they are backed by some of the banks.
Yeah, I mean, I hope. I think one of the challenges we've seen again and again is that African banks are not, they're very focused on, again, outside of South Africa and Egypt, where they're more diversified in their banking platforms. Most countries, the banks are focused on lending to the big corporates and then, of course, lending to government, not doing retail banking in the way that we know it. And many of the startups fall under, they don't make enough money to be taken seriously, right? So one of the things a lot of Nigerian startups tell me is like, they won't even return my call kind of thing. So I think it needs for venture debt, but Saad, I would like to hear from you. I mean, some say that the economics of venture debt don't make sense for Africa.
Yeah, no, absolutely, and I think there is a lot of focus on that. I would argue the opposite. I would say the inverse is true, where businesses are actually expecting 6 to 7% dollar return to venture debt investors. I think there is that slight disconnect where somebody could be asking for 20% on the dollar, and that's ridiculous. But somebody also looking for 6% is also a little bit challenging, because as you know, Aubrey, most dollar-based funds have hurdle rates of anywhere around 8 to 10%.
Correct.
So in order to kind of reach that target of 10%, if that works for a business, I think there's a massive alignment of interest, but also growth. And what I would also add is, in terms of venture debt, there'll be players like, I reckon, that as the venture debt space expands, there'll be players in the market that just provide the capital and walk away. That's not us. Mm-hmm. Our role is to develop that business. Even though we're credit providers, we'll still handhold. So there'll be a couple of businesses that you'll see in Nigeria stem out of board conversations that we've been having with our portfolio companies. As a result, the $100 million valuations coming out of that business. So that handholding, we feel, does not only come from international VC investors or equity investors, it also can come from debt investors.
Yeah, startups need partners wherever they find them, right?
Exactly.
In terms of growing.
Yeah.
But the question is, why aren't there more venture debt vehicles? And then we'll come to corporate venture in a second.
So that's a great question, and I think that's a billion-dollar question, if you can put it that way. I think the space is maturing now. A lot of the venture players only went on equity because of the upside potential. So their logic was, as long as we get 2 unicorns out of the 10 or 15 that we'll invest in, we've got our money back. Venture debt is a very different strategy. It's persistence. It's getting each deal to work and making each business a success. Why that's helpful for entrepreneurs is the success rate of businesses also increases. Because you're not only relying on equity, you're also enhancing your balance sheet with debt and making it more efficient. And newer entrepreneurs or startups need to start thinking about efficiencies across the capital structure.
No, I think that's true. Also, the hunt for unicorns, I think, is, as an investment philosophy, is newer in the Africa VC space, because traditionally, I think most people looked at it as most of the companies they were investing were cash flow positive already, and they were looking to actually have whatever you wanted to, what analogy you wanted to use, but the slower moving guys that were going to grow, right? So, but the other thing that's missing in the Africa venture capital and startup space is a lot of corporate venture. And so we were talking earlier, outside of Egypt and South Africa, you don't see banks necessarily having a lot of corporate venture arms, let alone the large corporates. And I've been calling for some time saying, when are you going to see a Dangote Ventures? And really, we're not seeing that. And Emad, why do you think that is?
Well, I believe it's correlated to two things. First, the DNA of banks and the evolution of the ecosystem itself. You find Egypt here, and the startup ecosystem has been developing for the past couple of years, especially very aggressively, and this is a huge opportunity for corporates to bring in this wealth of knowledge and connections and access to distribution and support, so that they can be a real value add investors, because the issue is not about raising funds, it's not about the money, it's about the value add and bringing the real value add. You've mentioned how venture capital firms view debt, and they don't typically like their startups to take more debt. I view it differently. We've learned it since the early beginning, when we used to work in corporate lending. It's always healthy to have a balance of debt and equity on your capital structure. It's a matter of, will you be able to honor and really service the debt from your own operations or not? This is the question here that we need to maybe give more advice on to startups and really help them to bridge it.
And why do you think CIB and CVentures came into being? What makes a unique situation? How do you think of it differently than, say, again, the major Nigerian banks currently do not have venture arms?
I think it's part of CIB's DNA. CIB has been always, I've worked for CIB for the past 25 years. CIB has launched the first factoring company, the first life insurance company, we're always thinking ahead. So I think we're blessed.
Yeah, and CVentures doesn't just invest in Egypt, so that's an exciting aspect as well.
Yes, because now with the development happening in the Egyptian ecosystem again, we've focused and we're now laser focused on, now is the right time to support Egyptian startups to grow and really foster.
And I mean, in non-Egyptian startups as well, right?
We do cross-border. Originally, because we were focused on financial technology investments, we had a strategy to invest across the globe. So we made investments in the US, UK, and in Egypt. However, currently we're a bit more focused on the Egyptian startups for now, just to bring in the wealth of expertise that we have gained throughout the past 3-4 years in order to further support our local ecosystem and then grow with them, again, cross-border.
And one of the things when thinking about corporate venture, I come back to is, look at the role of the telecoms on the continent, right? They have the most data. They are the ones that are bridging offline-online interface for the most part. They have the most agents, and if you think of fintech as being built on the back of agent banking structures, they have the most agents. I mean, the estimates in Nigeria for MTN agents are something like 250,000 or 250,000, which is so high, right? And in terms of the agent reach, when you compare it to like a Paga, which is like a 15,000. And then of course, bank branches are much lower. So, when will we see more activity by African telcos in terms of corporate venture, do you think?
I think it's coming in Egypt. I know for a fact that it's coming sooner rather than later, and I actually happen to know that maybe a couple of other banks are expected to be launching venture.
All right, look at this, Leland. You're getting some early announcements here, some the scoop, if you will. Well, I want to bring Ashraf into the conversation on how sovereign wealth funds can play in this mix. I think most startups, when they go out raising, they don't think about talking to sovereign wealth funds. And we know there's been some movement, particularly those in the Gulf, to look at ways to support innovation. So what's your perspective on it?
Thank you, Aubrey. Let me share a quick overview about what sovereign fund is doing abroad. So generally, what we used to hear about sovereign wealth funds, that they are investing internationally, mainly for the sake of future generation of their own country. What's happening here in Egypt, a lot of sovereign wealth funds mainly invest locally, trying to promote for economic growth and attract foreign investments and local investments with the private sector as well. So what's happening, for example, in the Gulf or in Ireland in terms of sovereign wealth fund, they are investing abroad. They are trying to build locally their own capabilities. They have their own accelerator, incubator, seed funds, and invest internationally. So one of the big investments that happened, but it was, of course, its late stage was in Uber, was in Karim. So such investments, we hear now about Swivel, we hear about Fouad, we hear about e-finance. So we are expecting more investments to come into the space. What's happening here in Egypt, for example, for sovereign fund, we have Sovereign Fund of Egypt, and we have as well sovereign entities, if you can name it. You have national banks. So national banks are investing in venture capital. We heard in the last session that Central Bank of Egypt is trying to launch a 1 billion innovation fund. So this kind, you can name them as sovereign, but they are not sovereign wealth fund, but they are aligned in a way or another.
Yeah, one of the things I'd like to see is a study of all the innovation funds, because on the continent, there have been many of them, and I'm not sure that they have resulted in a lot of innovation or really helping the startup space. I think the IFC was doing a study on the Nigerian one that was launched. Usually they're launched before elections in many countries as well. So, you know, I think the question is how effective can these kind of fund initiatives be versus a sovereign wealth fund investing in, say, I don't know, Saad's platform on Naira, right? If the Nigerian sovereign wealth fund invested in that platform, that long-term sustainability, you know, acting as a fund of fund. So do you see their role, Ashraf, is acting as a fund of fund or doing direct investments?
I think both of them, Aubrey, both of them. So maybe you have to have fund of fund and the matching maybe fund. Mm-hmm. So you help first-time managers, for example, here, Sawari, Algebra, and so on. And you have to invest by yourself maybe in strategic sectors. But you have to have your own team. Maybe what happened in Emad case, it's independent company. CVentures is an independent company, have different policies and procedures, have different speed in making investments, of course, than that of CIB. So when you have, but I would like to share with you one thing. In some cases, founders are afraid of getting investments from local sovereign wealth funds, maybe because muscles are different. So what if we have conflict? Yeah. So maybe having an independent body, transparent policies and procedures, and time will tell. I think by the passage of time, we will find much more and more investments in the space from local entities.
Yeah, I think it'll be interesting because you need to think about the structure, right? Most sovereign wealth funds manage, you know, hundreds of billions of dollars, especially the GCC ones. And the question is, how are they going to play around with tiny money comparatively? Like we're talking pennies on a dollar kind of perspective. But their role in there, as you said, there could be conflict from thinking about what if we have a problem, but at the same time, it de-risks. And this brings in Eleni to the question, because one of the things we're going to think about is how global players, whether they be governments or entities like UNDP can create blended finance structures that will de-risk investing in early stage startups, therefore creating new products as well. We talked about venture debt. We talked a little bit about corporate venture. Eleni, tell us what UNDP is doing in thinking about blended finance.
Sure, thank you. I think just picking up on some of the things that were said, I mean, the fact that we have limited corporate engagement is something that, I mean, it exists for reasons. I think the risk, as you mentioned as well, the risk perception is still extremely high. And I think that has to do with another issue, and I think that was mentioned earlier as well by Saad, which is the lack of local VCs, local angel investors, just local collaborators really in all of this. And so that's, some of the things that we are sort of looking at UNDP. If I go back a little bit and look at our innovation ecosystem in general, it's largely foreign financed in Africa. And it's largely sort of post $1 million and above. So that early seems to be left to the donors who are putting in grant money, working with, and obviously I'm overgeneralizing a little bit, but you see a lot of the sort of the flavor of the month, the pitch competitions.
Especially in social sectors, in more social startup kind of sectors, you see much more grant money. The grant-entrepreneurs, I think the grant-entrepreneurs were a phenomenon 10 years ago, but less so now, and it depends on the country as well. Smaller markets, they're the more grant-entrepreneurs.
Yeah, I think there's still that 10,000, 5,000 ticket size is still, very much in the realm of the pitch competitions, the hackathons, the challenge programs. And then the incubators are also on the same rat race, looking for, also grant money. So what we're trying to do at UNDP is launch a new initiative called Timbuktu. And the idea of it is to bring together something like a fund of funds, but really much more of a parent fund, establishing subsidiary funds. And to your point, Aubrey, about what's happened with all the innovation funds on the continent, we've actually done some work on that. A lot of the Pan-African funds, including at AFDB and elsewhere. And part of it really is this a structural issue, which is trying to do direct investing and failing because the design of these funds really was not set up to leverage existing players, the TLGs, the Sawaris, and so on. And so what we're trying to do is not replicate that or launch yet another fund. In fact, what we've looked at is the YOSMA program in Israel and Singapore that has sort of picked that up and gone further with it. The idea that a parent fund can, work with subsidiary funds that really are privately managed, that are leveraging private capital. So the idea is that the parent fund is catalytic funds, and we're looking at obviously the number that everybody throws out, everybody's favorite number, the $1 billion. But wherever we land on that number is relatively less, I think, important. But kickstarting it is the important thing. So if you look at again that YOSMA example in the 90s in Israel, put 100 million into 10 funds. Each of them was leveraged 1.5 times by private money, and that got leveraged into 3.2 billion in less than 10 years. What is very different on our continent, what Israel didn't have to do, is to really bring in the pipeline right into the model. So what we're trying not to do is a fund that, puts in money and then looks for opportunities, but rather at that hub level, or let's say the sub-fund level, to have a sidecar venture builder. So it's a venture builder plus venture fund subsidiary structure that would work absolutely with private entities. The hub managers would be private, and both the venture builder would work with the local ecosystem as well as the hub funds.
I think it'll be really critically important for the smaller markets in Africa as well, because as we know from venture stats, most of the money is going to Nigeria, Egypt, South Africa, and then Kenya. Really, those kind of four areas. Some into Abidjan and Francophone Africa, but generally, it's highly concentrated in the larger markets, and the smaller markets are left very dry when it comes to venture. So I'm sure that's something you're thinking about as well in the design of this program.
For sure.
For sure. I do want to turn to the audience and see if there are any questions we can weave in early. I don't like to when people only give 5 minutes at the end and we don't get to anything. So please, we'll take a few now and we'll weave them in as we go. Go ahead and say your name and we can hear you. You're right next to us.
Yeah, my name is, sorry, for the 9
Okay, okay.
And Aubrey, one thing while the
Sure.
question is being framed, what I'd like to kind of mention is there is this need to figure out where these corporates are coming in and whether they're going to crowd out private capital or private investors or crowd in them, right? Because that's, sometimes we see the likes of CDC UK, Propaco, et cetera, competing against private funds.
Yeah.
That shouldn't be the idea. The idea should be it's a crowded in market. Everybody's going in with something that they know. So as these corporate venture arms are thinking about kind of getting involved in the market with direct deals, I think there's that space that needs to be looked at rather than everybody fighting for yield and opportunities.
Yeah, I mean, I'm not sure that's going to happen because if you look at the evolution of U.S. corporate venture and Indian corporate venture, they're investing alongside each other all the time. And what usually corporate venture brings is sector expertise, distribution, other things that the traditional venture fund wouldn't bring because they're not in the space. So, and if you're building a SaaS company, then yeah, Salesforce Ventures, you want something like that in your cap table in addition to the venture funds that got you off the ground to begin with. So, but I hear you very much on the DFIs and the DFI kind of donor programs as they come in, or it's not donor money, it's taxpayer money that's dedicated to development finance. I think that is an issue. Let's take this question here.
Yeah, my name is Giselle Moepo. I'm the founder and CEO of Okapi Finance. And Okapi Finance is a fintech with the mission to bank the unbanked. So we are banking the unbanked.
Yeah.
And we accelerate financial inclusion by creating a financial ecosystem. So involving like institution, company, corporate, microfinance, you just name it. So my question is regarding the funding of women entrepreneurs, because I think that's a huge issue. I'm a Swedish Congolese fintech entrepreneur, and what I've been seeing is that it's really difficult as women to get funding. And even if we look at the statistic, it's like with all the amount you are getting on funding in fintech, you have just 2-3% going to female entrepreneurs. So I just want to hear a little bit what you are thinking about that and what can be done to change the situation. Thank you.
Sure, sure. Any other questions we can take in this batch on alternative forms? Okay. So maybe I'll start with you, Eleni, and how are you thinking on UNDP about these sub-funds and how they would address things like inequity in the venture space?
I mean, in general, all of this is meant to have an inclusion lens.
Exactly.
And so within inclusion, of course, women are going to be something that we look at. But it's also not really, it's not a social fund where we're trying to tick off boxes and say, this many quotas of this and that. So that, because we don't think that would be commercial and therefore not necessarily viable. But at the same time, I think we are going to have a very strong, and being the UN, we have to, have that inclusion lens for good reason. And it's the right thing to do. So I think you could look to that from us.
I mean, the challenge there is, of course, until the faces of capital allocators change, it's definitely challenging to change the pipeline process. People invest in people they know. They invest in networks that they know to verify. It's just a result. And the thing is, people can't invest in things they can't see. And often entrepreneurs of color or women, and this is true globally, it's not just an Africa problem, it's true absolutely in the US globally, that women of color or women, period, are invisible to traditional sources of capital. But thankfully, you'll see a movement of more and more women fund managers in all levels. I think the challenge is when we're talking about this space right now, which is alternative venture models, you don't have even enough debt funds, period, to even think about. I mean, I can name maybe 3 debt funds on venture debt on the whole continent, and I'm not sure I'm encyclopedic on it, but there's very few there than to even think about, if there are only 3 or so debt funds, to even think about like, okay, how many have women percentage? I mean, we need to think about that, but at the same time, it's not, there's not enough of them. And then at corporate venture level, I mean, sovereign wealth funds, I'm not sure how many sovereign wealth funds of the world are managed by women, but this is some of the challenge we have globally when it comes to capital allocation towards women.
ECA did launch something about 2 years ago, the African Women's Investment Fund. Have you heard about that? So I think it's 100 million, and it's meant to actually identify women-led funds. Maybe you're one of the recipients.
I think really the issue, because I'm based in Sweden, so this is not just an African issue, it's everywhere. The women, even in Europe, you know, Sweden is one of the countries which is very advanced when it comes to equity between men and women. But when you look at the investment sector, you still have that issue. And for me, I think it's like men invest in men because they look like them. So when you go as a fintech, as a woman in fintech, when you go and meet all these venture capitalists, they are men, most of them. There are not so many
That's the capital
women.
allocator
I think
issue.
they invest in what look like them, and we need more women running this venture capital.
Yeah, I think that's the capital allocation question, right? And that's where Ashraf and the work that you're talking about with fund of funds becomes very critical, because most of the time women are first-time fund managers. So if they're not players, if you know, I tell this to the DFIs all the time, the CDCs and DFCs, et cetera, the US the Development Finance Organization, the British Development Finance Organization, they all have a program called 2X, which is supposed to invest in women-led entities or women-benefiting entities. If they do not address the first-time fund manager issue, they will not get the pipeline of women fund managers that you would like to see, because many of them are first-time fund managers.
Yani, quick comment, apart from the fund of fund.
Yeah.
If you look at the CEOs of the biggest fintech companies on the news, Fouad and eFinance, for example, recently, both of them graduated, both of them are men, okay? And both of them are graduated from Raya, yani, a well-established company. So maybe one starting point to have in Fouad, in eFinance, some executives are women. So they are the potential and the future entrepreneurs or the future fund manager for fintech companies. So I think Aubrey replied beautifully. It's a global issue, it's a holistic issue, it's not just related to fintech, but I understand your point of view.
I just want to a bit step in and defend men a bit. So I tend to slightly disagree with the statement of men investing in men. What we're seeing here is there enough pipeline from women founders in the first place? And by experience, when we as a corporate venture see a startup led by a woman and it's successful in doing the right job, we back it up 100%. So I think it's a mix of the development of having women already leading startups, and then developing the investment thesis afterwards.
Yeah, and maybe I'll do the same. I'll defend men a little bit, but not too much, because I'm just cognizant of it's topical. But I guess, for example, what we do, I mean, Viola might be in the room, founder of Amba. We are very keen on kind of funding those type of models. So one thing that we've realized is, exactly as has been mentioned, that there may not be enough female founders yet. So as a consequence of what we do in the businesses that we invest in, we promote women where we can, bring them to boards, increase their exposure. From that level, they'll be the next founders. As a consequence, you're building the ecosystem, not just trying to figure out a solution for investing in women. I think that needs to happen as well, as UNDP is going to try and achieve, I'm sure. But also it's the it's the development of the ecosystem where women are more involved, are more equitable in the conversations. So that happens with investors pushing that agenda. Agenda 2X, as you mentioned, and we're kind of subscribers to that agenda. And we've done a lot of work in that space where we're looking at women managers, we're bringing women to the board. As a consequence, those who've left have started their own businesses that we're very keen to invest in. So I don't think it's a men versus men thing. I think it's just trying to figure out what works. As was mentioned, it's a commercial game. If you don't return capital to investors, there'll be less capital to deploy. But as long as you can demonstrate that return on capital, you'll always have capital to deploy. That's just my
Yeah, it's clearly, I mean, again, when you look at it globally, it's clearly not a data issue, right? Women return better. All the data shows that women return better. When you have women on boards, women CEOs, the return on investment is higher. It's just that often in venture, it's even more extreme because a lot of women founders are not in the same sectors that traditional venture goes into. And that comes to STEM and other systemic issues. But, we're certainly not going to solve it in the next 15 minutes. But we have room for other questions on, please, these two right here, on alternative venture structures.
Okay, my name is Sahar Salam, and I am the CEO and happen to be a founder of Fintech company in Egypt, TPay Mobile. Very excited to have all of this conversation because it's very relative to the stage of where we are now in terms of the evolution in the market, in the region, in the continent. And I have two comments, and one question is one comment. First is about this conversation about men and women and all of this stuff. I happen to be, I wouldn't say lucky, but I think it is the answer to all of the factors that the gentleman and the lady had really explained is that it's a product. The women entrepreneurs are a product of exposure, experience, being in the corporate world, knowing what to do, and whenever, the market see the product, they do invest, and I didn't have any challenge, honestly. It's a 7-8 years company. We were backed by local ecosystem and international ecosystem, and we've been able to do also a story that is not 100% local. It's a Pan-African story. We exist into 27 countries between Middle East and Africa, so we made it happen. And I'm very excited to be here in this moment because it is a very exciting moment in the whole ecosystem that all of this maturity had happened across all of the players. And I don't think that we should face, even as women entrepreneurs coming from inside Africa continent or from inside the Middle East, to be able to have access to what it takes for our dreams to come true, given that you do have what it takes to make it happen. So thank you very much for the question, lady, but I think you should not face any problems anymore, hopefully, given all of the kind of exposure and efforts that have been done into that dimension. My second question or comment is related to the topic, actually, that your alternative funds. And I'm really excited to have a panel dedicated for this because, yes, I can relate to the story between that at this stage and the kind of gross investment needs that we have in such, maybe there are more than TPay in this size that needs this type of capital structure and this needs of, funding exposure in order to make the vision and the mission happen and continue the growth. So from that perspective, I didn't know before that panel that I have working capital funding. It's very important for growth stage companies, for platform, SaaS, fintech, tech, name it. So it's very important topic. Happy that I am here listening to all of you, and I would like to really invite, let's say, more and more of this specific topic vertical lens.
And have
moving
you taken on any working capital local debt from banks, or where are you getting it now?
Yeah. So I had it the hard way, but I did. I mean, currently we've done the incubation, then the private equity UK based, and then we've got also the working capital from EBRD. And yes, we are doing more and more, but EBRD was really a little bit, despite that I'm here in Egypt, I'm listening, of course, to all, but it was not as easy to do working capital funding from inside our own countries, knowing the relationships, be it in Middle East, UAE, be it in Egypt, be it in Africa, Nigeria. It wasn't easy.
Were you able to take on, you had to take working capital in dollars then?
Yep.
So
Yep.
So let us take this other question here.
Thank you.
And then, thank you for the intervention, and we'll give some feedback on that. It's a perfect example.
Thank you very much. My name is Mohammed. I'm the founder and CEO of Ekuity. We're an edtech company. However, it's like we're acting as a digital ecosystem for higher education.
Yeah.
And we embed solutions that has to do with Fintech when it comes to student financing. So that's what we do. We started over in Ireland, actually, and then it comes like a similar issue because we raised fund outside of Egypt, and then we came also here backed with some investment institutions, which definitely give us a bit of perspective in how hard to do this mix between approaching international market with a bit of local investment. My question actually goes to Mr. Emad and the rest when it comes to, beside injecting fund into startups in different stages, how that, let's say, work around bridging expertise from big corporations, especially backed like with a massive bank like CIB, to startups in different stages, and how that is actually scalable, especially an early stage company might need different support comparing to others.
Yep.
So it's not just like a normal program that everyone is going through, and it's not really adding value to the current stage of each venture.
Sure, so what's the value add? Any last question from the audience before we come to this? Okay, so we have, Emad, maybe you'll start on this question and then we'll get back to the other working capital issues.
Well, I can start by honestly saying we took a long journey in this. It's not, we've discovered it's not, for us as an independent venture capital yet, we're a corporate as well, so we need to bring value add from the mothership. It took us a while to understand it's not one size to fit all, and it depends on the touch points and the model of the startup in order to actually gain and leverage from what CIB has to offer. So currently what we're doing and providing is, depending on the vertical you're working on, we can provide expertise because, again, as a bank, we have touch points with all the industries working in Egypt. So we can bring expertise, we can bring advice, we can bring governance, we can bring, we can open doors with other related industries. So this is in terms of connections. What we're currently working on is maybe more of a standardized approach on the quick wins that you should have by dealing with a corporate venture, like integrating with our digital capabilities, embedding, and actually this is one of the hot topics that we were discussing recently, is about fintech and financial inclusion, and I'm personally a firm believer that financial inclusion is not about getting or availing financial products, it's about embedding the financial products into the lives of people, and this is how we're trying to make it a bit of a standard approach so that we can, you're an ed tech company, how can we bring in fintech expertise within what you're offering for the welfare of your company and the customers and the bank at the end of the day, and CVentures as an investor. So I don't want to take more of this.
I mean, I've already seen CVentures operate where they've looked at startups and then introduced them to CIB, right? In a lot of fintech space, they need partnerships with banks And so fundamentally, I mean, you're dealing with someone who's already inside a bank, more or less, and can help you navigate and is invested in that partnership. So I think that's a clear value add. Saad, do you want to talk about value add and anything in response to the working capital question?
Yeah, sure. On the value add, what I'd say is absolutely in the fintech space, I think you can't find a better partner than a bank. What I would say generally, and no kind of intent at targeting banks, but what you'll see in conventional banking is assets sitting on balance sheets that are just useless assets. And banks are hoarding those assets because they don't want to take write-downs. Now, something that we're trying to do in Kenya, for example, or East Africa is build a recapitalization fund, buy assets off of banks' balance sheets that are really the stepchild of the bank. The bank is really not paying any attention to them. But again, nothing to do with the venture stage, but I'm really pointing out the fact that if you find the right partner in the banking sector, nothing better than for a fintech or an ed tech business. But you need to find that right partner. That's your value add. And maybe you can do it in conjunction with a private player and the bank, and then both of them can work collaboratively. Especially with larger financial institutions, just galvanizing and bringing that momentum takes a bit of force. It's a massive ship that you need to kind of move. On the working capital, what I'll just say is, it's very interesting that the ladies actually secured capital from EBRD. One of the conversations I was having with EBRD just last week in Tunisia is we've launched a Tunisian initiative, or an initiative in Tunisia with the government called CDC Tunisia, where we launched a local fund. It's quasi-equity, so not really debt, but the idea there being that we are providing a local currency tranche and a dollar tranche. So that is imperative for you as well, and that was my conversation with EBRD, is why are you so reluctant that if I have a local tranche that you follow on for a single country risk? Their biggest issue is single country. So unfortunately, you've got to educate even these larger financial institutions. Yeah. And then they'll say, oh, we'll make an exception. So it's
possible. It's possible to push, maybe.
Exactly.
Ashraf, and then we'll come to Eleni for last things.
I just would like to comment on Saad, to follow on Saad. Saad, don't convince EBRD, convince local banks. Local banks have the local currency and they have the mandate to, here we were talking, we have a mandate in Egypt to fund SMEs. 25% of the loan portfolios of banks should go to SMEs, and many of the banks haven't on the track to achieve that. So they would like to deploy finance to microfinance companies, to venture debt companies, because you will cater to SMEs and startups.
Yeah, maybe so it comes back.
A win-win situation rather than to go to EBRD and CDC. There is a business case now. It's not just developmental case.
No, I think you're right, but I think it's a question of visibility and trust sometimes. So, for example, one of the startups that I invested in Nigeria had a big working capital problem, but their customers were all the Nestle's, Unilevers, the big companies, even the banks, Access Bank, others. But they were just invisible to the banks in a way, because they weren't big customers of the banks, and so they went to a merchant bank. But the merchant bank was like, are these guys serious? They asked me whether I could vouch for them in a way, and I didn't have to vouch for them in any way to say except I invested. But it helped to unlock the trust of the local money, and they ended up going with the non-traditional bank, a merchant bank that had Naira to lend. So I think there's some options that are maybe non-traditional banks in the market as well. And sometimes they just don't have visibility to the startups because they're doing busy banking things that don't put them in contact every day with the startups. Eleni, any comments on these?
On the value add, I think it's important and worth saying that a lot of the ecosystem builders try to do everything for everybody, and that is, I think, a big issue that doesn't work. And so, to Emad's point about the verticals, I think having industry domain expertise, the connections, the networks, the mentors, the coaches, all of that, by doing it as a vertical specific sort of accelerator or incubator seems to be the path to value add and to being able to access knock-on capital.
Yeah, I see three categories actually of value add from investors that need to be routinely investigated by founders. Number one, is this investor going to help you raise future rounds? And that's where a lot of the international investors will come in, because they will help you raise future rounds as you go globally, because the investment expansion story of a lot of African fintechs and others is not just Pan-African, it's Pan-EM, and so you need some with global reach. Number two, will they unlock local debt? I see it again and again and again. So will this investor unlock local debt? And number three, will they somehow help me attract talent, and that tech talent? And those are the kind of the three areas that I see. Then there are other distribution partners, et cetera, but a lot of these startups have figured out their own distribution. Not that it can't be enhanced, but those three things are like critical for value add beyond just the capital. So, but I want to thank our audience participants. It makes this worthwhile for all of us. And to thank my panel. And to Leland and Zacharias for organizing. So it's a pleasure to be here, and look forward to future panels. Thanks, everyone.
Thank you.
Thank you. Thank you.